Hello and welcome to Look Back, Look Ahead. I'm Frank Calderone. Last week, ending August 2nd, all of the major indexes declined as economic data and corporate earnings weighed heavily on investors. There was a lot of economic data last week, so let's get right to it. The home price index remained flat in May compared to April, amid a slight rise in both mortgage rates and housing inventory. However, compared to the same month a year earlier, the index was up 5.7%. Job openings remained unchanged in June at 8.2 million. The Consumer Confidence Index came in higher than expected at 100.3. However, the components were mixed, with the Present Situation Index declining in June, while the Expectations Index was higher in July, but still pointing to a potential recession in the future. The Employment Cost Index increased less than expected during the second quarter as private industry workers' compensation costs slowed more than state and local government compensation. Pending home sales surged 4.8% in June as the recent decrease in mortgage rates and increase in inventories, both in new and existing homes, pushed the index higher. The Fed left interest rates unchanged, citing more confidence needs to be gained that inflation is moving sustainably toward 2% to lower interest rates. The ISM Manufacturing PMI declined more than expected and remained in contraction territory for the fourth consecutive month. Total construction spending declined 0.3% in June compared to May. Initial jobless claims were 249,000 for the week ending July 27th. The most since August of 23. The employment number came in less than expected for July at 114,000 jobs created. 175,000 jobs were expected, while the prior 2 months were revised downward by 29,000 jobs. The unemployment rate increased to 4.3 from 4.1%. The labor participation rate increased slightly from 62.6 to 62.7%. And finally, factory orders were much lower than expected and declined for the second consecutive month. Year to date, the Dow is up 5.4%, the S&P is up 12.1%, and the Nasdaq is up 11.8%. The yield on the 10-year U.S. Treasury bond is 3.8%. Oil closed at $73.92 a barrel. Gold closed at $2,437.21 an ounce, with silver closing at $28.53 an ounce. For this week of August 5th, we have a very light week of economic reporting. Monday, we'll get the final S&P Services PMI and ISM Services data. Tuesday, the U.S. trade deficit will be reported. Wednesday, we'll get consumer credit data. And on Thursday, initial jobless claims and wholesale inventories will be reported. Nothing scheduled for Friday. And as always, we'll keep a watchful eye on these and any other events that may and will shape the markets. If you have any questions of anything you've heard in this video, please give us a call. Also, if you have investable assets of $300,000 or more, we can provide you with a complimentary financial plan. Call for details. We are accepting new clients. This is Frank Calderone from Raymond James in New York. Have a fantastic week. Be well, stay safe, and remember, always look ahead.